Hey everybody, Tom here, and this is your podcast for Friday, January 26, 2024. I call this the Thursday afternoon just before Friday. You'll probably get on the weekend podcast. So I'm broadcasting Thursday afternoon because I'm in front of my computer. I got a little bit of time, and I'm actually doing a little bit of trading. I think I've got about 6 or 7 trades I got going on with something that I'm beta testing. It's not a new system. I'm just retesting it because I got some new rules in it. Anyway, I got 3 things that I want to talk about with you today. I want to talk Trump. I want to talk about earnings this week and next. And I want to go back to Sacrfice and not about money this time. So here, let me cue this up. So I've got this earwig going on in my head right now, and I'm going to make you have it too. Somehow I took the theme to Rudolph the Red-Nosed Reindeer and somehow turned it into a small song about, about digital world acquisition. I'm pretty sure this is royalty free. Let's see what we can do here. You know, Alpha and Beta, Gamma and Vixen, Apple and Google, Tesla and Netflixin'. But do you recall the most volatile symbol of all? Digital world acquisition had a very spacky start. And if you ever saw it, you would see it drop and drop. Now all of the other traders used to laugh and call it names. They never let poor DWAC join in any trading games. Then one frosty January, Trump came out to say, I'm gonna win this caucus tonight, so won't you guide my stock up right? Then how the meme traders loved it as they shouted out with glee, go to the moon, DWAC, and make some profits for me. I can't even, I can't say that without cracking up. That's my earwig. I can't get rid of it. It's in my head, and I wanted to stick it in your head as I want to start off talking about Trump and DWAC. So some of you are probably thinking, what the hell am I talking about here? It kind of starts off with news. You think about this guy. I mean, he's tripping over everything he says, and everything he says gets, mangled into all kinds of sound bites and all. If you go in and you just Google the latest news on Trump, my God, this guy, you could fill volumes with just the news headlines. He's testifying in the E. Jean Carroll defamation trial. He decided to go live. I don't know why he would do that, but either he's got to be the dumbest guy in the world or he's a genius. And I guess time will tell. Just wow. You keep going on with news and you see McConnell's casting doubt about the border deal. Trump's opposition is going to sink it. There's immigration compromise going on. That's in the news. It says Donald Trump's going to blacklist Nikki Haley donors. Who's coming up with this stuff? It could be real, but wow. I see that. You got all kinds of the latest news on the campaign. Peter Navarro got sentenced to 4 months in jail. He was a Trump advisor. I just think the news is it's going around every possible negative scenario you can get. And unfortunately, I think it's going to backfire because all it's going to do is it's just going to raise the base. It's the establishment versus Trump. Anyway, what in the world has this got to do with the stock market? Well, I'm going to tell you right now. Because if you look at all this news out there, and then look at what you see. What do you see? Well, last week we saw Trump take the Iowa caucus. And if you thought that was a fluke, then this week we saw him take the New Hampshire primary, and he won over half the votes. Now, there were only 2 people in this contest, so he had to win over half the votes to get it. But he had a decisive victory. It was a double-digit victory. I don't think there's been that I can recall where a front runner or a nominee took both the Iowa caucus and a New Hampshire primary. They're both 2 completely different bases of people. You've got a lot of, you've got the Midwest. Iowa caucus is Midwesterners. They are mostly, red state Republicans. And then you get the New Hampshire primary, which is a lot of progressives. And yet both of them came out for Trump. So what do we got going on soon? Well, we've got Nevada, we got South Carolina, we got Super Tuesday. Here's a question to all of you listening to this right now. And you can feel free to put in the comments. Give me your comment. How many of you think Trump's already the nominee? After these 2, you think he's the nominee? Here's how I break it down. I break it down like I break everything else down, by probability. And when I look at trading, if you know me, I'm a pattern trader, and I look at seasonal patterns. I look at trending patterns. I look at contrarian patterns, channel patterns, volatility patterns, statistical patterns. So if we were to take statistics and historical probabilities and you break it down, this is kind of how I see it. The probability-wise, Trump's going to be the nominee if he can get past his legal woes. And I think, honestly, that might be one of the only reasons Nikki Haley is still left in this race. She's rolling the dice. Honestly, I think if somehow she would end up as his VP, I think there you go. You got a lot of independents that might actually vote for Trump. But, I think she's hanging out there because if for some reason his legal woes get the best of him, she's the only one left in this race, which leads me to believe, how upset would Ron DeSantis be if for some reason Trump can't continue because he dropped out? What's he going to do? Drop back in? Okay, so that's a probable, my probability is that based on statistics, based on historical probabilities, Trump's more likely going to be the nominee for the Republican Party. Next probable outcome is someone on the Democratic side going to step up to possibly replace Joe Biden? Could it be Gavin Newsom? Could it be Michelle Obama? You hear all of these. There's a probability that could happen. And then, of course, the final probable outcome is a Trump versus Biden rematch. It sounds like, to me, it's almost like one of those great boxing events that you hear about, these rematches. And I got to tell you, if it's a Trump-Biden rematch, I don't care if you love him or you hate him, either one. It's going to be one of those things. I'm telling you, mainstream media, and I said this last week, they might hate Trump, but they love him for the ratings because, all of a sudden, that's what people are tuning into. Now, either way, no matter what you're thinking about here, either way, is there an indicator out there that you can look at if you haven't already? There is. There's actually a symbol, stock market symbol, DWAC, Digital World Acquisition Corp. This is a SPAC company that was created years ago. And Trump, and I guess through Trump's trusts, own a pretty large part of this SPAC. And so what's interesting is, I had that little earwig that I just did for you, but you think about this for a moment. This week, DWAC has been the most volatile symbol of all, because if you take a look at it, if you looked at it long term, it was something that spiked really hard years ago, and then it dropped. And over the last, wow, I would say if you go back and you look at it, well, you go back and you look 2.5 years when it first came out. This thing spiked in 2021 and went up to $94.20. Then it came down, but it ran back up again. And in March 2022, $97 was the high. Then it started the long road down because the meme traders picked it up and then it got pushed back down. And we're talking about something that got down into the low teens. I mean, $12 maybe. Over the last year, this thing sat, or really, even look at the last 3 months. It languished in and around $17, $18. Then on one fateful day in January 16th, okay, that was 9 days ago, right? What day can you think that January 16th fell on? What day did January 16th fall on? Well, that was a Tuesday. And that, folks, was right around Iowa caucus. And on that fateful day, we jumped. That was the day after the market. We had the 15th was Martin Luther King Day. The markets were closed. Tuesday, we open, jumps. DWAC jumps. Closed. It jumped from $17.32 to $22.35. Jumped back above 20 in big fashion. It was up. It was up above 20, first time in a long time. All of a sudden, everybody started peeking their head at this and saying, this stock's in play right now because Trump won. Trump won the Iowa caucus. From there, okay, Tuesday, Wednesday, Thursday, Friday, up, up, up. By the end of the week, it was at $26.38. Now, we're at January 19th. We roll into January 22nd, $49.69. Do you know we had a long signal on DWAC. Wasn't what you thought, though, okay? Because anybody that went long this stock at $49.50 has got to be crapping themselves right now, because here we are toward the end of the week and we're back down to 34.21. That's 15 points off of where we were at the beginning of the week. I'm talking 4 days, folks. Okay, from the 22nd, this is I'm recording this Thursday afternoon. So we've go 22, 23, 24, 25. In 4 days, this stock has had a range. It was above 50. It went as high as 57, 58. Well, we're coming into a close right now around 34. It's off. Would you believe it if I told you that the option trade that I picked is still up by 50%? I'm going to tell you what that is in just a few minutes. But I bring up DWAC because if you look at it in the last month, it's still up 93% from where it was a month ago. If you look at it in the last week, and we're talking about the close of Friday to where we are right now, still up 40% in the last week. However, if you picked it up on Monday as a stock, you'd be down. But if you did a special option trade that I talked about on Monday, you'd be up 50%. How can the stock be down 40% and yet you be up 50%? Well, it has to do with option prices, and it has to do with what's gone on in the world of options. Now, typically option prices on stocks, this is generally where options go. There are cycles in option prices. Typically, those cycles can be spotted every quarter, and you can see options on stocks that go higher and then crash lower before and after earnings. As we get into earnings, these stocks tend to have options where people start talking about them, and then they go up, okay? So I'm going to give you a couple of ideas on what I'm talking about here. So next week, okay, we've got some of the Magnificent Seven coming out with earnings next week. And I want to talk about them for just a moment because, in their cycles, I can tell you what the options were a couple, within even the last month or two. and where they are now. And in terms of a percentage, you don't have to see this. You just have to hear it. Okay, let's talk about Google. So Google has options coming out on the 30th. Okay, I think all these are AMCs, after market close. So after the markets close, they'll report their earnings. So the 30th, we get options to come out on the 30th. That is a Tuesday afternoon. That report, those earnings are going to come out. In December, the options volatility on Google was at a 20, and now we're coming in on 30. So those options relative to where they are, the at the money options, folks, they're 50% higher. There's 50% more time premium in these options now than there were 6 weeks ago. Okay, that's Google. How about Microsoft? Microsoft's been a darling AI stock. Well, their earnings are also out the 30th next week, next Tuesday after market close. And we're talking about something that, their options, the volatility went from an 18 to about, it's in the high 20s now. Their options are up 40% as we go into earnings. Okay, who else is reporting next week? Apple's reporting on the 1st of February after market close. And their options values, they've gone up about 30% in the last 6 weeks. Amazon also reporting after market close on February 1st. Also have seen their options up about 30, 35% just in the last 6 weeks. Meta's same thing. I mean, new highs, and options have creeped up quite a bit. They're much higher than they were 6 weeks ago. And then the only one is, the only other one I'm looking at is NVIDIA. They don't report until the end of February, the 21st, actually. So, I'll be revisiting that one. But even their options are starting to climb too, because the stock has got up above 500. It's got up above 600. This thing's going crazy. Where I'm going with this, folks, is that options, all right? You don't need a calculator. You don't need artificial intelligence to know that in between earnings cycles are where most stock options are at their lowest in implied volatility. And they're typically at their highest right before those earnings come out. So what do I do as a trader? I like to buy premium before earnings, and I like to sell premium right before earnings. And I'm working on some stuff I'm working on some stuff right now. Right now, as of this particular broadcast, I am 1, 2, 3 and 3 and 1 this week. 3 and 1, 3 and 1, 3 winners and 1 loser. I think that's right. 1, 2, 3, 4. No, 4 and 1. Excuse me, I'm counting wrong. I'm 4 and 1. Got a couple more trades. I got 3 that are going on. 3 that are going on right now. So I'm going to add to that. So I'm going to have, by the end of this week, I'm going to have 7 trades. Right now I'm 4 and 1. No, it's 3. I'm sorry, 3 and 1. I can't count today. I'm hoping to be 7 and 1 by tomorrow's close. I'll let you know how that goes. Maybe I'll do a video on that real soon. Anyway, the takeaway is, and how we get back to DWAC, is that with most stocks, we can find that time premium on options are much more expensive right around earnings, and they're cheaper in between earnings, but not all stocks. You take a DWAC, which has been literally out of the news, nobody's been trading it. Implied volatility on DWAC was somewhere, I had to, let me see, just to give you an idea what the IV has been. This is a time premium stuff. This thing's, it's not cheap. It's been around 80 or 90. That's already expensive. But to go to 220 a couple days after Trump won the Iowa caucus, insane. Coming into the Nevada primary, insane. That's a 300% move up, not around earnings. So, when you got something that's a 220, I'm telling you this, stock's trading at 50, and here I am looking at selling the puts for next month, the 20 puts, folks. You know what I'm talking about? I'm talking about the ability to acquire the stock for 20 and to get a nice fat premium for it. So your break even is even lower than that. Down close to where the stock was before all the action began. Now, what's happened? Since 58 high, stock's now trading down in the low 30s. I'm still obligated to buy it at 20, but I think 20 is a fair price. I'm being paid to buy it at 20. So I thought I would share that with you, is that every once in a while we get a gift, and the gift horse, what's that phrase? Don't look a gift horse in the mouth. Don't stick a hand with a carrot in the gift horse's mouth. So, stock buyers, and there's a bunch of them out there. The meme traders all got on this thing at probably around 50 because that's where all the volume was. Now they're sitting in the low 30s. Diamond hands. How'd diamond hands do for you on AMC? How'd diamond hands do for you on GameStop? How'd diamond hands do for you on Bed Bath & Behind? It's better to play the probabilities, to play the historical probabilities, to play the statistical probabilities, and you cannot do that buying stock. You can do that with options. All right. Now, final thing I want to talk about is I want to get into Sacrfice. Okay. And I'm talking about, that kind of not sacrificing money. Last week we talked about, or 2 weeks ago, I think we talked about money. Maybe it was last week. This week I want to talk about time. And I have a little bit of time left for this podcast, but I want you to think about this. It's going to take some time, even before you begin, if you want to do something other than trade every once in a while. If you want to do something like trade when it's cool, I can tell you this, trading when it's cool to be a trader is never going to work, because by the time it's cool to be a trader, you would need to be on the opposite side of cool. So I want you to think about a couple of things as we roll into the weekend, or roll out of the weekend, depending on when you're listening to this. You need to ask yourself, how much time do you want to commit to the type of trader, the style of trader you want to become? You know what style is? Style is directional or non-directional, maybe both. Okay. Style is picking a pattern, right? Picking a pattern. Is it going to be seasonal? A seasonal pattern is looking at the best time to buy and the best time to sell a particular stock or particular ETF. And the only way you know that is by being able to backtest and see, well, what were the best times to buy and sell? Trend is another style. The trend is your friend, except at the end. And trend is a technical style. Being a contrarian, meaning you are going to take the opposite side of popularity. That's a tough one to do. But that is a technical style. Now, all three of those involve stocks. The next two I'm going to tell you involve being a student of options, volatility, and I'm talking about maybe being on the buy side of volatility, knowing when to spot options when they're cheap, knowing when to spot options when they are expensive, right? That is being a good steward of volatility. Statistical, volatility for a moment. Let me talk about volatility. If you were if you were a trader and you used volatility, you were looking at volatility in the market. You know what you'd be looking at right now as far as cheap? What's cheap? Bank stocks, options on bank stocks are cheap. JP Morgan, cheap. Bank of America, cheap. Wells Fargo, cheap. You know why? Because all their earnings are behind them. The earnings are behind them. The big or little momentum that they had is out of the way. And now you can look at those as cheap. You know what else is cheap? Oil, options on oil stocks like Schlumberger, Halliburton. These are cheap too. And so that's where I'd be looking if I were an option trader. I'd be looking at banks and I'd be looking at oil and energy, and I'd be trying to figure out on trend or on contrarian or on seasonal, what in these groups look the best to the upside or the downside? Because you know what? Those are the ones I want to be buying call options on, or those are the ones I want to be buying put options on if I don't like them. Statistical is really where I go to the sell side. Statistical is where I went with DWAC coming into the beginning of the week. You know, I said DWAC dropped off a lot. And you might be saying, well, wait a minute, Tom, doesn't puts go higher when a stock goes lower? You'd think so. But you know what? When DWAC went from the 50s to the 30s, I want you all, when you have time, go take a look at it. You won't see much movement in it, but go take a look at the 20 puts that expire, literally anything, mid-February. The 20 puts mid-February, they were trading at 70, 80. They were $1 at one time. They were $1 the morning of the 22nd. You know where they're at right now? 35 cents. And the big chart, the big piece is the drop off in volatility. The volatility in these options went from about 250 down to around 150. So they dropped a full 100 points in volatility. The fact that those were so far out of the money. Now, is there a guarantee they're going to expire worthless? No. You know, could you take the money and run right now? Yeah, you could. I'm just telling you that there was so much pent up demand for this stock. It's all anybody talked about, that the movement, you know, when a stock doubles in one day, you're going to see option premiums explode. And they just happen to have contracted almost as fast as they went up. But what I'm talking about here is sacrifice. So I'm talking about, you know, finding out what kind of style you want. Be a jack of all trades, but be a master of one or two. Be a master of seasonal trends. Be a master of statistical volatility or something. Get good at something. Now, I want you to think about this too. You know, there's a style of trading where you could be a longer term trader. That's somebody who trades for 3 months or more. Maybe you're going to be a medium term trader, that 1 to 3 month. That's where I hang out, folks. You know, I even trade inside the 30-day realm, but I'm not a day trader. I do not go in and buy and sell stocks and day trade them. I leave that to the emotional traders. I think 99 out of 100 day traders are emotional and cannot make consistent money because of their emotions. I think that, and you know, to me, that's just not what I want to do. Especially if you work 40, 50, 60 hours a week, it's impossible to be a day trader. Something's going to fall apart. More than likely, your job and your day trading will fall apart together. So that's something I want you to think about. I also want you to think about markets. You know, what kind of markets are you going to trade? Are you going to be a stock trader? Or are you going to be maybe an ETF trader? Are you going to trade commodities? Are you going to trade options? Are you going to trade Forex? There's so much stuff out there. I've seen and heard a lot of people say, well, I trade everything. Or, you know, I trade whatever's profitable. That's an interesting one too. There's no such thing as trading everything and profitable in the same sentence. It's like if you worked at a retail store, you cannot be the clerk, the stock boy, the butcher, the bakery person, the cashier, and the manager all at the same time. You're going to run yourself ragged. You're not going to make a dime on anything. So, like I said before, you know, become a jack of all trades. Get an understanding of everything. But get good at one or two. That's where you want to be a master. Okay? Finally, and this is the part that I want to talk about too, is repetition. Repetition. Because how are you going to break down? And I'm talking to those of you that have a career right now and you want to make this maybe a second income, or you want to make this more than a hobby. If you want a hobby, just cut tape right now and go find something else to do. But if you want to make this more than a hobby, you got to think about building a trading plan. And you want to talk about how many days or weeks into your plan are you going to study. And I'm not talking about doing this for hours every day. If you study for 15 minutes, half an hour, maybe an hour, a couple times a week, you're going to be better off than 99% of other traders out there. Okay? So, you need to think about that. You need to think about risk management. You need to think about money management. You need to think about individual trades, and you need to think about the entire account. Okay? Because that's where I go. I hit the entire account first, and then I backtrack and I see, well, what did I do right? What did I do wrong? Did I follow my entries correctly? Did I follow my exits correctly? I mean, honestly, folks, the best trading plan, working the best trading plan, trading successfully and boring go hand in hand. The more exciting that you make trading, the more likely you are not going to make consistent money. Okay? I want you to keep that in mind. All right. So that does it for me. Next week we're going to be talking about, we're going to get in and we're going to look at the mag stocks. I mean, Tesla had a bad week. Tesla's had a bad year. They got a lot of issues, and I think the big problem with Tesla is, they've got all this AI and robotic stuff kind of sitting here, and I think Elon's coming to the terms where he's going to be going to the board saying, "Hey, give me some more stock or some more stock options, or I'm going to take my robots and I'm going to go make another company." And if he does that, Tesla's a $100 stock. I don't think that's going to happen, though, because of the brand, because that's his baby, and because I think going with bringing the robotics and bringing AI technology into Tesla makes it more than an automotive company. And that's something worth the long-term investment. I think he knows it. I think the board knows it. And so if that's the case, then I still see Tesla as a long-term buying opportunity, but only if those pieces all come together. So we'll talk about that. We'll talk about the rest of the Mag 7 next week, see how they turned out. Have yourselves a great weekend. And remember, you might know Alpha and Beta and Gamma and Vixen. You might know Apple and Google and Tesla and Netflixen. But now, guess what? You know the most volatile symbol of all, that DWAC. And I don't think that it's calmed down now. But I think you're going to see that thing going crazy again and again for much of the year. And I'm not saying it's going to go crazy to the upside. I think it's going to be a very volatile stock for 2024. All right. Thanks, everyone, for listening. We'll see you next week. Bye now.